Hello, everybody. Come on in. We're going to do another little session here, teaching a little bit of technical analysis. So come join me. Let me ask you a question. Have you ever traded with candlesticks? What does this have to do? What does this have to do with the stock market? And the answer is absolutely nothing. This is gingerbread cookie scent. Has nothing to do with the stock market. But candlestick patterns that we see on the stock chart, they have a lot to do with the market, and they give us incredible insights. We're going to talk about today's market right now. Let's go. Hello, everybody. Welcome to another of these late night live stream sessions on social media. Hope you guys are all doing fantastic. Hope you've had a great day. And we got some interesting stuff to talk about in the market. For those of you who don't know me, my name is Jeremy Whaley. I am the founder of Trade Maestro. You can find all of the things that I teach and share about the stock market over on trademaestro.com. And of course, depending on where you're watching this video, YouTube, Facebook, somewhere else, you can learn a lot here as well. But check me out over at trademaestro.com if you want to get access to everything and all the goodies that I put out there for everybody to see and share. All right, today in this session, what we're going to talk about is we're going to talk about candlesticks. And, you know, whenever you hear the word candlesticks, most people don't immediately think stock market or crypto trading or whatever. The truth is, it's quite relevant. A little brief history, candlesticks actually come to us from Japan. It's a very ancient form of technical analysis, and it was almost lost completely until Steve Nissen revived it in the early 1990s. And here we are, you know, some 30 years later, and it's a major part of what we use in the market. So let me just take you over to a stock chart right now. Excuse me, my voice cracked just a little bit there. What you're looking at here is actually today's market with the Dow Jones Industrial Average. And I want to kind of zoom in as much as I can. Now, take a look here. I'm going to draw an arrow. You see that candlestick right there, that little green thingy-mwopper. We call that a candlestick. Might be hard to see. I tried to zoom in as much as practical, but here's the thing, folks. If you looked at the market today, maybe you can see this on this screen. I realize I can't quite zoom in the way I want to. I'll write it up here. The Dow Jones Industrial Average today, as of the time I'm recording this video, or doing it live, which is what we're doing. It will become a recording for those of you who don't join me live right now. But right now, the market down 85 points for today. The S&P, this is SPX, S&P index down 20 points and change. And the NASDAQ is down 180. So obviously, it was a bad day in the market, right? And if you just turn on your random television set, you turn on the radio, whatever, what you're going to hear reported is the Dow is down 85 points today, or the NASDAQ's down 180 points today, rough day on Wall Street. And yet, what is it about this stock chart right here that tells me that the odds are tomorrow we're not going to have a bearish candlestick, or more specifically, we're not going to have a bearish day? Now, I'm not going to say for sure we're not going to have a bearish day, but there's something special hidden in this candle, and that's what I want to talk about here as I go a little bit deeper. So first thing you need to understand is, let me see if that helps. There we go. Let's try that right there. Look at these candles, and you notice that we have a green candle, which typically is a little bit more of a bullish candle, but we have a green candle in the face of being down 85 points for the day. How can it be? How can we be down 85 points and we have a green candle? Because isn't green up? Well, first of all, let's talk about how candlesticks are constructed. And to do this, I'm going to scoot this over just a little bit. And I'm just going to draw it on here. There's really two types of candles. We have what we call a hollow or an open candle. And that's open as in there's nothing filling it in. It's going to look like this. That's what these green candles are, because I have these color coded. So these green candles are hollow. There's nothing filling them in. And then we have a solid candle, which is basically this right here. Now, the ones I'm drawing on the screen happen to be yellow because I'm using a yellow pen. But if you were using a traditional chart, it would probably be black and white. And what you see on my screen is a yellow, I called it a hollow candle. That would typically be referred to as a white candle because it's on white paper, so it looks like a white candle. But the truth is it's just not filled in. And then the one you see on my screen here as a yellow candle, is typically what we would see as a black candle, because in the ancient art form of candlestick trading, they would fill it in with a black candle. Okay, so that's your two basic types of candles. Now, the question is, how did we come up with a green candle in the face of a bearish market? And the answer comes in how candlesticks are constructed. So what you need to understand about candlesticks is they use the four basic price points: open, high, low, and close. I'm just going to write OHLC here: open, high, low, close. OHLC stands for the opening price of the day, the high price of the day, the low price of the day, and the closing price. Now, when you see a open or a hollow candle, I'm going to change my pen color here so we can draw some attention to it. The way that a hollow candle is documented is you have the opening price. That's where I just marked with a green O. We have the high, which is the tip of that line up there. We have the low price of the day, which is the bottom of the line. And then we have the closing price of the day. And this candlestick is drawn up from the opening price to the closing price. That is what we call the real body of the candlestick, the difference in the opening price and the closing price, okay? Now, the one right next to it is very similar. If I zoom in just a little bit here, the high of the day is still going to be marked with that little line on top. The low price of the day is still marked with a little line on the bottom. But here's the difference. Our opening price is actually at the top of the candle body, and we draw down to the closing price. You see that right there? Hopefully that makes sense and you can see that. That, ladies and gentlemen, is how we construct our candlesticks. Now, what's the secret? What's the secret to interpreting these? The secret is to understand how that upper, what we call candlestick shadow, and that lower candlestick shadow, how they were created. That's the secret, and that's the secret message that's embedded here inside these candles. So let me clear that off here, and let's go back to today's candlestick here. And if you look at today's Dow Jones candlestick, it's actually a green candle. What? Now, green because that's the color I have it, but it's also a hollow candle, which means that we opened, if you can see it, we opened here, we traded all the way down to here, that's your low price of the day, and then we closed up here, and there is no upper shadow because we actually closed at the high for the day. Okay? Now, the difference in the opening price and the closing price was positive. Consequently, we have a open or a hollow candle, which in my chart shows up as a green candle. We had a higher close than open. That's the key right there. We had a higher close than open, and that's why this candlestick presents as though it's a bullish candle, even though the end-of-day price showed that we're down 85 points. You say, well, why wouldn't we have a red candle? We were down 85 points. Let me show you. Come back over here to the chart, and the reason is because whenever you look, I'm sure you can't see this, it's too small, but when you look at the end-of-day closing price over here, which was down it's down 85 points. When you look at that, that's comparing yesterday's close to today's close. Yesterday's close to today's close. And this is the way that charts have been reported, prices have been reported for decades. It's how they always relate it to yesterday's close. So we're down, in this case, 85 points relative to yesterday's close of whatever that price point was. But when you look at the chart, this tells us all we need to know. When you look at the chart, we actually gapped down to this price point. We traded way down here to this low price, and then the bulls came back in and drove this candle all the way up until we had a closing price that was up here. Folks, is that bullish or bearish? Well, that's bullish. The bulls were clearly in control. Now, it took a while to get there. They were sleepy this morning, but the bulls were in control. That's the secret of this candlestick right here, that long lower shadow. And here's a secret for you to understand. Anytime you see a long lower shadow on a candlestick, it's bullish. See, a lot of people think because it traded all the way down there, it was bearish. No, no, no. It's the opposite. The only way that that shadow could get created is if the stock traded down there and then the bulls came back in to drive it up. The flip is true as well. Anytime you see a long upper shadow, it's a bearish candlestick because, well, the shadow's bearish, I should say, because in order to create that upper shadow, the bulls had to run up, and then the bears came in and drove it back down, which created that long upper shadow. And so when you look at this candlestick today, yes, the market shows we're down 85 points, but we show we're down 85 points because yesterday's close, which is where I'm drawing the arrow right now, relative to today's close, that may be down 85 points. But folks, you got to give the market some ebb and flow. Markets don't go straight up. Everybody knows markets don't go straight up. And the secret of this story that we're getting from the candlesticks that you're not going to get from the nightly news, that you're not going to get from the radio or any other outlet that's just reporting that, oh, the market's down 85 points today. The secret is that we gapped down early this morning. The bears were trying really hard and they couldn't hold on. Instead, the bulls came rushing back in and it drove it up, and we actually ended up with a open candlestick or a hollow candle, however you wish to use the terminology for that. All right, this, folks, is the secret of candlesticks. What's so powerful about candlesticks, and the reason we use them, is because they give us insight into trading sentiment. Trading sentiment is how the people who are trading the market feel about that stock, whether it's a stock, could be a futures contract, could be a cryptocurrency, whatever it is that you're trading. These candlesticks give us insight into the sentiment of how the people that are trading it feel. That sentiment is worth way more than the closing price. The fact that the market was down 85 points today, that's irrelevant. Frankly, it could have been down 600 points. If at the end of the day, we see all that buying pressure coming back in and we see a bullish candlestick that shows that the sentiment is turning bullish, the odds are tomorrow you're going to have a positive follow through with it. Now, let's just do another example on this just to drive this point home just a little bit further. As I said, this is the Dow Jones Industrial Average. If I were to go, this is a daily chart. If I were to go to an intraday chart, let's just go down to like a 5-minute chart. So now suddenly, well, that didn't size very well, did it? Suddenly, we see each of these candlesticks represents 5 minutes on the chart. Let me show you this here, right here, folks. This is where we opened up today. Where I just drew the arrow, that's where we opened up today. You see that big gap right there? Yeah, I got my moving averages on here, but you can see that big gap right there. We kind of, early on, it was within the first 20 minutes of the day that we put in the bottom for the day. And then we rallied and we came right back down and retested that bottom. We rallied, we tested that bottom 4 times. 4 times we basically tested the exact same bottom. And then look, at the end of the day, the last hour and a half of the day, the bulls were in control. What's the story, folks? The story is not that the market was down 85 points. The story is that the bulls have not given up. The bulls are still fighting hard, and they're driving hard. Now, let's go to another example that would just push this further in terms of driving home what I'm trying to show you here. I think if I can get my pen to cooperate. Come on, pen. Work for me. All right, let's look at the S&P 500. This is the S&P 500. I'm going to zoom in on this so you can see this candlestick. And, oh, that's a red one. Oh, so the S&P is down 20 points today. We have a big red candle. It must be a very bearish day, right? No, actually, what did we just learn? That long lower shadow that you see right there. Here, I'll take this as full screen as I can. That long lower shadow, I hope you can see that on here, actually tells us everything you need to know. Because early in the day, the bears came in, they drove the market down, and then by the end of the day, the bulls came back. And even though we had a red candle, even though technically it's a bearish candle, that long lower shadow is showing that all that buying pressure is coming in. It shows that the bulls are not done. They're fighting hard. Now, let me take this to a 5-minute chart, and you can really see this. Of course, once again, we got to resize this thing, but there it is. That was the story of the trading session today. We opened up right here. Now, most of the day, the S&P was pretty bearish. That line I just drew down there. And then what happened? That last hour and a half, boom, the bulls came back in. And you see the bulls are running, and they're running really, really hard. The NASDAQ showed us something very similar, and I'll just hit this one very quickly because I don't want this video to be forever. There it is. This is the picture of the NASDAQ. NASDAQ opened up. It was very bearish today, very, very bearish. But the last hour or so of trading, look at that. Set up perfectly for a bullish pickup tomorrow morning. So yes, if I come back over here to a daily chart, which I'm going to do right now, yes, it looks like it was a big bearish candle. See that? But look at that lower shadow. I got to sneeze. Whew, I think I averted the sneeze. Look at that lower shadow right there. That's where the bulls are coming back in. This is back on a daily chart now. And you see how your stochastics is crossing up to support this? Folks, this is a bullish chart, which, by the way, if you were to go back to my Sunday night class that I did that we call Profit Picks, which I do every Sunday night, what did I say about this week? I said this is exactly the kind of trading behavior we could expect for this coming week. We'd see a little bit more bullishness, a lot of this kind of shakeout, trying to push the market down. And in the end, because of inflationary pressures and everything else, we're going to continue to see the market rising. That's what we see happening here right now, folks. And the candlesticks were telling us everything. So hope this has been helpful for you. Listen, I can teach you a whole lot more about candlestick trading, a lot more than I'm going to do in this video right now. But I hope this gives you a little bit of insight into how you interpret the candles, and I hope you enjoy what you just saw here. And if you want to learn more, let me tell you the best way that you can do that. You can take my Pick Winning Stocks Challenge. It always scares me when I do that. You want to learn how to pick trades, do better analysis, learn how to do trading strategies, put your trading plans together. You want to learn how to work with indicators, lower your risk. If you want to learn how to make more money trading the market, you know where you need to start? You need to take 21 days of your life and take this 21-day Pick Winning Stocks Challenge. The Pick Winning Stocks Challenge is going to teach you my entire trading system so that you can actually do the things that you really want to do in the market. Things like what? Pick the direction of the trade. Is it going up? Is it going down? Learn to manage your risk. Learn to apply a winning strategy. Those are the 3 steps that everybody has to do if you want to win in the market. And the Pick Winning Stocks Challenge is going to teach you how to do that. So all you need to do is go over to my website at trademaestro.com and get yourself started with the Pick Winning Stocks Challenge. That is the perfect place to start with all the stuff that I have to offer. Some people come to the website and they're like, well, I don't want to sign up for a membership yet. Look, you don't need a membership yet. Eventually, you might want a membership, but where you start is the Pick Winning Stocks Challenge. So if you're looking to take your trading to the next level, that's where you start. And speaking of the next level, you know, I would really appreciate it if we could take this relationship to the next level. Subscribe to my channel, either right here on YouTube or Facebook or wherever it is that you're watching this. If you want to get notified of all these videos that I put out, just go ahead and click that subscribe button. And then every time I post one, you'll get a little ding, 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 and it will tell you that there's a new video going up. All right. Hope you guys have found this very useful. And let me know what you think in the comments below. I'll be happy to read those comments and give you the best feedback I can. And I look forward to sharing another video with you very soon. Until then, happy trading to all of you. We'll talk to you soon.